It's rad money, where your grades can't afford to miss it. Hi, welcome to Rad Money with Amanda Fox. I'm here to report today on market moves that affect you. As middle schoolers, you're familiar with the social media platform Facebook, and I'm sure most of you have Facebook accounts. But what I bet you didn't know is its presence on the market. Facebook just released its fourth quarter earnings report, and they reported better than expected earnings. What does this mean for Facebook? First off, an earnings report tells us the revenue and profit that a company makes, and reporting better than expected earnings means that they exceeded what the analysts expected them to report in terms of profit and revenue. Facebook currently has 1.23 million users. It originally IPO'd, which means it had its market presence in 2012 with a $38 purchase price. It dropped down about $20, and now Facebook's up 14% today after reporting that fourth quarter earnings report, bringing it up to a whopping $62. One of the reasons accredited to Facebook's success is its ad marketing. Its ad marketing and video marketing that it incorporates in its mobile platform is what's led to Facebook's revenue success. 53% of their profits stemmed from this ad-based revenue or ad-based service that they've incorporated and integrated in their mobile platform. Now, if Facebook is incorporating ads in their social platform, what does this mean for other ad-based companies? What does this mean for television? These are questions we need to ask when we're evaluating market trends and performance of certain stocks. This completes today's segment of Rad Money with Amanda Fox. I hope you learned something. Now we're going to go to you guys on the streets and talk about some vocabulary for the stock market. Let's go! Word on the street, vocabulary exchange. Hi, let's get started with our lightning round. Our first caller is Alexis from fourth period. She's going to ask us a question. So Alexis, what's your question?
How did they come up with the stock market?
The world's first stock exchange had roots dating back to 1532, and it began in Belgium. It looked much different from the way the stock market looks today. Instead of trading stocks openly, businessmen would mostly gather to discuss outstanding debts in any business that they had to deal with. The first American stock exchange was the Philadelphia Stock Exchange, and it was founded in 1790. In 1792, there was a crash in the U.S. bonds market, and that crash led to a group of brokers that would gather under a buttonwood tree in New York, and they would agree to trade with each other. This founded what would later become known as the New York Stock Exchange. Now, in the stock market game, we're going to deal with three markets, or three exchanges. We're going to deal with the NASDAQ, the American Stock Exchange, and the New York Stock Exchange. Our next question is from Quan from first period. So, Quan, can you please ask your question for me?
What is Wall Street?
That's a great question. Matter of fact, the first question's answer kind of corresponds with your question. So let's go into what is Wall Street. The name Wall Street bears some historical significance. As we learned earlier, the Dutch were the first to create a stock market globally, and they were also the ones to coin the term Wall Street. In the early 17th century, Dutch settlers inhabited the tip of Manhattan. They constructed this wall to act as a defense mechanism for the English. It never served its purpose, and the wall was eventually torn down. Later in the 17th century, toward the beginning of the 18th century, we learned that the stock market of Philadelphia was created when brokers would gather underneath the buttonwood tree. This same street in the same area is where Wall Street is today. Wall Street is now a symbolic icon. It represents and symbolizes the financial heart and institutions of America. And the final question from the lightning round is from Noah. Noah's in my fifth period class, and Noah, go ahead and ask your question.
What is a bull market?
That is an excellent question, Noah. Matter of fact, I've created an awesome Powtoon video to explain the bull market in addition to the bear market. So tune in and we're going to switch over to that video. I hope at the end of it you have a firm understanding of the difference between a bear market and a bull market. Bull market versus bear market. What market are we in now? Understanding market mentality. A bull market is a term used to refer to a stock or the market when prices are rising. A bear market is a term used to refer to a stock or the market when prices are falling. Why the bear and bull metaphor? It has to do with how the animals attack their opponents. Bulls swipe their horns up, while bears swipe their paws down. This is the catch. In a bull market, although confident investors believe that a rise in stock prices will continue, market trends are always changing. Having a bear mentality isn't bad for the market. When bears sell off stocks as the market trend changes, it creates opportunities for the bulls to buy at the low price. The overview summary. Bear mentality and bull mentality are both needed in a successful market system. The market needs both mindsets, buyers and sellers, bears and bulls. What kind of mentality do analysts have about the current market?